Hey guys, welcome back to another live trading video. We're taking a look at dollar Swiss, and I'm back in another trade here, but I'm going to catch you up to speed because unfortunately I did not catch the initial components of this trade on camera. So I'm just going to catch you up on the trading behind the scenes, or why I took this trade more likely. So we're looking at dollar Swiss, and recently we've seen a strong uptrend. I'm using the replay function, so I was able to put myself in back in time to show you guys why I took this initial trade. And we had this big run up, like really strong push to the upside, basically off of strong CPI or higher than expected CPI numbers in the US. That was a driving catalyst for the dollar. And again, with that, we're expecting the Fed to remain very hawkish to try and cool that inflation number. So we're expecting the dollar to be strong, as raising interest rates makes bonds more attractive, attracts foreign investment, and higher interest rates is a little thing that scares the markets. And of course, when the market is scared, they may rush to the dollar as their safe haven. So regardless, that's a little of the fundamental side of it, but price is jumping to the upside here, strong, and we put in a little bit of resistance here and we see a bit of a sell-off. Now, I actually chose to go ahead and take a buy trade on the sell-off. That actually did really poorly. So my first attempt at buying the dollar Swiss was not a profitable trade. My first attempt was a retest of the 38.2, and just as quick as I was able to click the buy trade, pretty shortly after I was stopped out for a loss. And I'll show you guys that result, just so you know I'm not going to only show you my winning trades. I attempted number one here. And if you know my trading style, then you often know that I will usually take more than one attempt to try and buy a particular market when I'm bullish on it. So price comes to this level and I say, okay, I'd like to buy this. And this is my first attempt to go long, and it fails miserably. But I looked at the chart later in the day, and you can see this thing was moving so fast. We sold so quickly, but I still wanted to buy it. I wanted a second attempt, and that is where I took my second attempt at the 61.8% retracement. And we can skip this ahead a little bit and see kind of what has happened since. So remember, my initial entry, and you'll see it on my broker in just a second, was down there. So price shoots to the upside, does really good, but then finds resistance at none other than the same level that I tried to enter previously. We sell off, and I'm thinking, well, I'm probably going to get my stop hit, which my stop loss at the time was just below market structure. So I'm sitting there and I'm saying, you know what, if the stop gets hit, the stop gets hit, but I'm willing to try and continue to try and hold this uptrend. And sure enough, we actually were able to stay in the trade to where we are now. Okay, so now we are caught up to speed, and you can see here's where I am in the trade. So there's the orders that I mentioned that you would see on my brokers. So there's order number one. Attempt number one was at this level, and attempt number two is at the 61.8. Clearly, in hindsight, I should have only taken trade number two. But oftentimes, we're able to catch a good profit on trade number one. In fact, let me show you an example of that right over here. In this example, which this video is up on YouTube, I caught the 38.2. and it rallied beautifully, right? So it's worth it to me to take both trades. Sometimes trade one just doesn't quite work out. And hey, sometimes trade number two doesn't work out either. That's trading 101. So, losses are basically the only thing guaranteed when it comes to trading. So it's about managing them. So anyways, I really like this zone, right? So that 61.8, that was like where I held the trade. And since then, you can see we've had a really good rebound off of that level. But sometimes, this was kind of a lesson to me recently, I've been trailing my stop a lot more loosely. And I'm really glad that I have been, because in this case, it actually saved me from getting hit by just a break-even trade. So I've been less willing and more hesitant to trail my stop loss to break even recently, because I did some back testing on it, and I realized that in many cases I was just giving up a trade too soon just by taking a break even trade. And at that point, you might as well just hold the trade to a loss, or hold the trade until it becomes worthwhile. So at this point, it is time to actually go ahead and trail stops. So that's where we're at in this current video. So let me go ahead and trail my stop loss. So currently, if I take a look at this, I've got $791 of risk on the table still, technically. I risked an initial 35 pips on this trade, and you can see that's where my stop loss order is, just below market structure. Nothing super fancy. Yes, some would call this a retail style of trading. And, truthfully, if you're a retail trader, that just means you don't trade a hedge fund. So I don't mind being a retail trader, and I don't mind that label. I am a retail trader. and some of my technical strategies would be considered retail. So then I trail my stop to here. That's my next move here. We're gonna lock in $1,400, just give or take. And the idea here with where we're placing the stop is by design as well. You can see that basically we shot to the upside here and broke through this level of resistance. Then price pulled back and found support there. So what I don't want to see is I just don't want to see this market collapse underneath those lows, because that would tell me that this area is no longer valid and we'll just take our winnings. So at this point, we cannot lose money. We're up $2,800. Of course, this would not be ideal to take this profit, but it's still not a bad situation to make profit regardless, so I won't complain. The last thing I want to show you guys before we pause the video and give this some time to play out is a little bit of the back end of why I took this trade. Now, of course, the technical analysis was what I showed you previously, but on top of that, there's some very important market trend stuff that I pay attention to. If you look at the smart money positions right now under our smart money tracker on the A1 trading edge finder, which is our market scanner, what you'll notice is that 74% of retail positions, sorry, not retail positions, institutional positions on the CFTC's Commitment of Traders report shows us that in the non-commercial category specifically, 74% of institutional traders, hedge funds, banks, etc., are long on the dollar. And they've been long, actually, by the way. It's been fascinating to watch this year. So many trades, or so much trading has gone on to the long side on the dollar, which has been an incredible year, right? So the dollar has been so strong. And then conversely, if we actually take a look at the opposite end of the spectrum where we are shorting Swiss franc, 36% long with a whopping 64% roughly, give or take, are short on the Swiss franc in terms of institutional positioning. So that caught my eye. And then I went over to the individual view of dollar Swiss, and we could pull that up right here. And you can see we have a buy category overall. Now, no rocket science here. Basically what the Edge Finder does is it pulls resources from all these different places and builds us a dashboard to give us a general bias on a particular pair. And there are pairs all over the place, right? So you have all the different yen crosses, euro crosses, etc. But we're just looking at dollar Swiss at this moment. So the Commitment of Traders data is, like what I said, very strong bias to buying the dollar and selling the Swiss franc. So that caught my eye. But then also the retail crowd is heavily short. We know that the retail crowd tends to lose money in their trading, unfortunately, but for our own, resources, we could probably pay attention to trading the opposite side of it. And then, of course, we have our seasonality, which is this category right here. This is just showing you month by month what the average returns have been on this asset over the last decade or so. So knowing that in the month of October and September, they historically see a rise in the dollar Swiss franc, and November, by the way, that gives me extra confidence in buying the pair, right? So when I take a trade, it's not just based on, it's hitting a support level. It's based on trends, historical data. It's based on, what big players are doing, etc., which we can track entirely inside of the Edge Finder. So if you don't have the Edge Finder, you can check it out down below in the description. With that said, what I'll do is I'll pause this video. We'll give this some time to play out. We're floating $2,800. Let's see if we can get back to the highs. That would be my next key spot to start trailing stops a little bit further. So with that said, we'll pause and come back to the video soon. All right, traders, so it's been a little bit here since my last update on the trade, and things have continued to go well here on the dollar Swiss. We never got the retest, so we have just seen a continuation of this move here, and it does look like we have the opportunity to see price come back to the previous high. We're not quite there yet, but it looks pretty close. And at this point, what I'm going to go ahead and do is I'm going to go ahead and lock in a little bit more on this trade. So if we narrow in on the 1 hour chart, you can see this is, of course, where we initially entered the trade. We ran up and now have cleared this level pretty significantly. So now we actually have another level that caught my eye here as we continued trading in the New York session here. We saw this level come right back into play, and you can actually see, let's take a look at this. So we had key resistance, broke out to the upside, pulled back to that same level, and you can see actually two little tails there on the bottom and then a launch to the upside. So what that's showing me here is basically that there is still strong demand in this chart here for buyers, and I really don't want to see price fail underneath that level now. So previously, same concept, we had a key level here that we didn't want to see fail. Now that level seems to have popped up to here, where we found some pretty strong buyers in that area. So at this point, what I'm going to do is I'm going to go ahead and trail my stop further here into profit. And at this point, what I'm doing is I'm locking in $2,400 on the trade, which is a great spot to be in, considering at this point we can't lose on the trade, and there is that potential that it continues to run higher. So there you go. We just updated the trade, and you can see, like I said, the idea, the dream trade or ideal trade would be to see a continuation move back up to the previous high around 99.70. If that starts to come into play, we'll continue to trail stops and see if we can make some money on this trade. But if not, if this thing starts to stutter out and kind of fail out here and puts in a lower high, we'll take our profits here at this level here. So we have a game plan either direction. We can continue to watch this thing play out and try and be patient with it. So what I'll do is I'll pause and come back once this has traded further. All right, guys, so we're back taking a look at USD CHF, and you can see that in the end, we did ultimately get stopped out here for our profit of just about, let me pull it up, make sure I have it correct. It's $2,434.94. Now, on top of this, because the dollar Swiss offers a positive carry, meaning you get paid to hold this thing overnight due to the differences in interest rates between the US and Switzerland, you're actually able to collect positive swaps, meaning each overnight period, for me, my broker does this at 5 p.m. US Eastern, I get paid a positive swap. And what you're seeing now is some of those positive swaps on the screen. This brings the total profit of this trade up to $2,533.15, which is a nice little extra bonus for holding the trade for a number of days, as I entered this trade September 28th and closed out today 10/4 or October 4th of this year. So here we go. That's a pretty good trade. I would say overall, I'm happy with how this one played out. I didn't love, or I trailed my stop up, and the reason that we are now out is because we failed to really get back up to those highs. We came very close. I was thinking we could get up there and possibly even make an attempt higher, but that's not what seems the market has just chosen to do. So I don't try and predict every single move. My goal is to just sort of react, and at this point, we're seeing a little bit of failure, so I'll go ahead and stop out of the trade, take my profit, and move on. Now, I will say this might not be my last attempt on dollar Swiss. I do have some ideas to potentially re-enter this trade and still see if I can get that break above the highs some point here near in the future. So with that said, I hope you enjoyed today's video. If you were helped by this in any way, make sure to give it a thumbs up down below. Subscribe to the YouTube channel if you want more real live Forex trading, no nonsense, and see it again in the future. And with that said, we'll see you next time. It looks like you made it to the end of one of my videos. Thank you so much for supporting my content. It really means the world to me. And down below in the description, I put together some of my best resources for aspiring traders who are looking to improve. I've got some free downloads that could help you, some broker recommendations, and if you'd like to join our Discord or get access to some of our trading software, all of that will be linked down below in the description. Thanks for watching, and we'll see you next time.